It's been a rough year, not just for the stock market being in a bear market. The crypto market has basically been imploding. There are a lot of lessons to be learned from what has happened with things like FTX, Luna, Celcius, Three Arrows Capital. I'm going to talk about 5 ways that you can not only overcome what has happened in the market this year, but come out of it even stronger. First of all, cryptocurrency is risky. It is literally the highest risk asset based on standard deviation. If you don't know what standard deviation is, it's a measurement of how volatile an asset is. So yes, we have data backing that cryptocurrency, specifically Bitcoin is what I've personally looked at the measurements for, is the highest risk asset out there, beating out real estate, stocks, corporate bonds, all of it. Of course, with high risk has come high reward potential, and that is what has attracted people to cryptocurrency, specifically Bitcoin. People love the idea of decentralization, meaning no government can control it. It essentially works in its own ecosystem without any outside influence or control. That's why people were interested in something like Bitcoin. And Bitcoin is still the Mac Daddy of cryptocurrencies and still the true decentralized cryptocurrency out there that people can quote unquote trust more so than a lot of the other sketchy, shall I say, things that have been going on in the cryptocurrency world. With that said, diving into the very first thing that I want to discuss today is risk tolerance. Use this experience to really think about what your risk tolerance actually is. We like to think that we can handle a lot of risk, but when these events happen, like the FTX crypto exchange meltdown and bankruptcy, Celcius, which is going bankrupt, Luna, which was a token that basically imploded, all of these things that have happened and people have lost so much money. They went into it with the idea of, I'm going to make so much money, but they didn't think about the actual risk tolerance that they have personally to handle losing money. So I encourage everybody in this moment to stop, take a step back, and really think about what your risk tolerance actually is so that going forward, you can craft a portfolio that actually fits that so that you can stay the course and not lose all of your capital in one blow up. The whole idea here is to stay in the game. Don't do anything that will take you out of the investing game. And unfortunately, a lot of people here did not look at their risk tolerance and invest for that risk tolerance. So that is the first thing that's going to help you overcome this, is stepping back and moving forward with the right allocation in your portfolio to the right types of assets. The second thing that you can learn from here is understanding what your risk capacity is. So risk capacity doesn't have anything to do with your risk tolerance. It actually is your monetary ability to take losses on or to take risk on. And a lot of people, maybe they were thinking about their risk tolerance and they agreed that they had high risk tolerance, therefore they invested in a lot of these crypto projects. But what the real fact of the matter is they didn't have the risk capacity, meaning they didn't have the monetary backstopping and financial stability to be able to afford to take on high risk. So people that are young, that make a lot of money, have stable jobs, they typically have a higher risk capacity. People that have kids, families to support, that risk capacity starts to decrease because you've got your family that you have to really think about. You can't take on a huge risk and not be able to support your family. If you are older, getting into the retirement years, your risk capacity decreases probably even more because you need the money that you have to be able to survive through retirement, right? So risk capacity is different from risk tolerance, and it's another thing that I think this event with the cryptocurrency industry, this is going to be a positive to help people really stand back, think about that. The third thing that you can learn from this is you are not your losses. A lot of people are connecting their identities with their stock or crypto losses. And that is not what you should be doing. People lose money in markets all of the time. People make decisions that maybe didn't turn out as well as they thought. But look, this is why we refine our strategy over time. We get better and better, and we're able to sniff stuff out easier as we move along in our investing journey. You are not your losses, and you have to remember that. Do not tie your identity to your losses. Just because you lost money does not mean you're a bad person. Just because you lost money does not mean that you are not intelligent. Okay, there are some of the most intelligent investors out there, the most popular, high-profile firms out there that invested in something like FTX and got the wool pulled over their eyes. This has nothing to do with how smart you are. Really, this has more to do with your ability to craft a portfolio, an investment portfolio that's not going to blow you up by being too over-concentrated in a risky investment when your risk tolerance and your risk capacity doesn't really truly allow for that. The fourth thing to take away from this is investing is a journey. Money management is a skill. Portfolio management is a skill. And what you can learn from this is just that it is a skill. And just as if you wanted to learn the skill of golf, you can't just go out on the course with the golf cart and a new set of clubs and start mastering golf, right? You have to get out there and you have to start driving some balls. You have to start practicing your swings. You have to start playing the game, right? And getting better and better over time. You can't just show up and master it. And this is no different. And so the lesson to take from here is that you can now look at it that way and pull back and start to say, okay, how can I refine this skill set and do this better? The fifth thing to take away from all of this is to realize that you're in a bear market, and these are the times where you can really make the most money and reallocate, okay? So if you don't have any money left from all of this mess, from the growth stocks imploding, from crypto imploding, if you are tapped out, you are going to have to start over and build from scratch and go back to thinking about generating cash flow. How are you going to generate extra income? And you're going to just have to go through that process. And that's okay. That happens to a lot of people. People have to start from zero all the time because of different things that happen in their lives that they didn't expect, or maybe some bad decisions. This is not the end of you. You can rebuild. And that's the greatest thing about money, is you can rebuild after bankruptcies, after bad decisions, after, poor investment performance. There are things that you can do to rebuild from there, even if you have to start from scratch. Now, if you have some capital still left over to invest or to maybe pull out of certain things that you maybe don't want to be invested in anymore, you can take that money and you can reallocate it, or quote unquote upgrade your portfolio, as I like to call it. Sell the crap that you don't want to be in anymore and just upgrade and reallocate into positions that have long-term sustainability or true quote unquote decentralization, like say Bitcoin, for example. The main point here is we are in an environment where you can help recoup some of the losses by allocating the capital that you have left well. All right, Finance Fam, I hope that was helpful. To recap, the 5 main things that you can learn from this. 1, get more familiar with your risk tolerance and make sure you're invested for your risk tolerance. 2, get familiar with your risk capacity. Make sure that you're invested for that. 3, do not make your identity your losses. This happens to investors all of the time, and you can't let yourself mentally get there and feel that way, because it's going to affect how you move forward with your investing. And remember, we want to keep a wealthy mindset, even through the hard times. 4th, mistakes like these happen and make you a better investor going forward. So be ready, continue on that journey, and realize that every mistake is going to make you stronger and stronger. And then 5th, we're in a bear market. This is a great time to take the capital that you have left and upgrade your portfolio, redeploy that capital into other things that you feel better about going forward after you analyze what happened, and take this opportunity because it doesn't come often. Bear markets happen less than bull markets, okay? So we're in one of those environments where you really can recompose your portfolio, and maybe you should. Keep your head up, keep a wealthy mindset, and realize that you can come back stronger from this. Like this video if you found it helpful or motivating. Be sure to subscribe to my channel if you're not subscribed, and I'll see you next time.